Hey, stock market traders from around the world. It's your boy, Jerremy Alexander Newsome. Hope you're doing absolutely fantastic. Reviewing a broker today. This is OptionsXpress, which is owned by Charles Schwab. And as you guys often or may know, I do reviews on charting softwares and also brokers. So in the comment section below, if you want to check that out, you will see some links to some of those as well for some of the other videos if you are looking into some other brokers. So let's talk about just kind of the general overview really quick of brokers, if you don't mind, in regards to something that a lot of people do focus a lot of attention on is commissions. You know, a lot of people go in finding the cheapest broker for commissions, and that's totally fine. Obviously, there's nothing wrong with that. But when you're looking for a broker, consider yourself what type of trader you are. Okay, if you are a very, very advanced trader, you're trading all the time, you're in the markets all the time, then you're going to need a very specific broker. If you're just a trader, someone who loves trading, someone who invests maybe long term, maybe you just do your general retail trading, if you will, truly pretty much any broker will work. If you're just going to invest, buy stocks, or trade covered calls, or do something pretty generic like put money in money markets or funds or anything like that, really any broker will work just fine. Flip a coin, find out which one may pay you the best commissions or pay you the best rates. The more money you have in your account, the more you can kind of throw that body weight around. But if you're a really, really advanced trader, what's most important is kind of the instruments that you're trading with. So if you do trade options or Forex or futures, obviously you're going to need a broker that really fits that pretty well. OptionsXpress is a really solid broker for options traders. Commissions are a little bit high, but it's one of the few brokers who which does offer simplicity, cleanliness, ease of use, as well as really good customer service and customer support. Interactive Brokers is another broker that I'm really familiar with. I love it a lot, and it's not nearly as complicated as Interactive Brokers. So OptionsXpress is easy to use. And I would say if you are looking to get into trading more actively and you want to use a broker who is a little bit more beefed up for a lot of your choices of trading, OptionsXpress is definitely one of those that I would suggest. And again, it's for probably newer traders who are looking to get into actively trading. Interactive Brokers and Thinkorswim, they can kind of be a little overwhelming initially. So OptionsXpress, in my opinion, is pretty easy for those who are starting out. So obviously it's pretty simple. Go OptionsXpress.com, and you can create a virtual account if you want. So I'm actually just going to do that really quick. Just go to OptionsXpress.com, press the enter button, and you can see right here, virtual trading. Boom. Click on virtual trading, and you do have to open an account. So when I say open an account, when you're virtual trading, I do believe you have to be a U.S. citizen. You have to have a social security number, and it really is just like a bank account. You're going to have to fill out everything. You're going to have to fill out your social, your date of birth, your address, your mom's maiden name, what type of account you're looking for, all that kind of information. Don't let that overwhelm you. It's not a credit score check. It doesn't go on your credit, it doesn't reveal on your credit. It's a lot of information for not a lot of worries. So if you put in everything information, you're not going to get tracked down by the NSA because they're already watching you. The virtual trade is pretty easy to use. So again, if you're a brand new trader, but you're looking to get into trading, I would always suggest virtual trading. Even if you're day trading, swing trading, long-term trading, it doesn't matter. Virtual trade. Learn the brokers, learn how to make money, learn how to lose money, and learn how it all works and how it all feels virtually. Please first do that. And again, it's really easy to use and open an account. So if you want to open a virtual account or really a real account, you do just open an account. So again, this is a real account that you begin to open, and then you just simply go to either individual account or traditional IRA. Traditional IRA, you can only have a cash account. In OptionsXpress, a rollover IRA, you can have a cash account. Roth IRA, you can have a cash account. So the margin through an IRA, you have to have special approval for and all that kind of good stuff. Once you get into them, you can kind of talk to your broker about that, meaning you can call OptionsXpress once you actually put money in. But again, just click on individual account. That's the easiest thing to do. And I would suggest doing individual account and a cash margin account. That way you have more ability to do things like short stock, and do option trades, that kind of thing, through the trading platform. So I'm gonna go ahead and log in. And I'll show you guys a little bit what the virtual trading platform looks like. All right, so I'm in OptionsXpress. I'll show you exactly how to get there. You go click on Toolbox and click on Virtual Trading. This little page pops up, and then click simply Launch Virtual Trade. Another reason why I do like OptionsXpress overall is it is really similar. The virtual account is very, very similar to the real account, and just the kind of the flow and the way it works. So most of you guys are very familiar with stock orders. In OptionsXpress, you have some really good advanced orders. Really, the true story is, if you're not entirely sure what these do, that's another thing, another video for another time. Or you can always obviously find it in real life trading, where I talk about the difference between like stop limits and entries and that type of thing. But trailing stop, contingent order, one triggers other, which is a stock trade, one triggers other, which would be an option trade, one cancels other, or one triggers two OCO orders. So you can really do anything as far as the stock is concerned in regards to trading it. And you can have it where you have a trigger for a trade. Again, this is a stock order. Stock triggers the stock order, and then once you get triggered into the stock order, so let's say you're trying to buy shares of American Airlines, ticker symbol AAL. Once it triggers, then it places a target for you, and then places a stop for you, and that would be the one triggers two OCOs. So your trigger, your order sets up to trigger, boom, you set the trigger, then you set your stop, then you set your target, and then you do that. And so it's an OCO order. There's your OCO, and that stands for order cancels other. So if the trade comes up in here, boop, and gets stopped out, you don't have to worry about that trade being out there on the markets. It does cancel it for you, and it gives you a pretty seamless kind of set the trade up and walk away kind of feel, which is pretty good. So that's kind of the virtual stock order. The contingent order right here. The contingent is, again, you have your primary order right there, and then it can be contingent upon another symbol. It could be an entirely different stock. So let's say you're a big fan of trading Apple, but the SPY has to be doing a certain thing. That's kind of where you can do that here. That's kind of cool as well. The other one that I use a lot is the all-in-one trade ticket. Click on the all-in-one trade ticket. You can enter whatever symbol it is that you want and select whatever strategy you're looking for. So iron condor, call spread, put spread, call stocks, butterfly, iron butterfly, combo, whatever. So that's kind of interesting as well. It kind of helps it set it up for you, because I will say a lot of brokers out there, well, not a lot of them, but some of them don't really have the names of the strategies. You just have to kind of know what they are when you're putting them in. So that can be a little daunting for some of my brand new traders out there. But really, so the all-in-one trade ticket works fine. Options work fine, and X spreads. So the X spreads, if you're a big fan of credit spreads, you can click on the trade and go to X spreads, and you go combo, straddle, butterfly, condor, OCO, again, order cancels other. And here's your advanced options down here. So you have your spread, and let me see if it lets me do this in here. Okay, great. So you have a spread, and you're saying, okay, I want to do a spread. So if you guys are familiar with credit spreads, you can say, all right, I'm going to do this spread on Apple. But only if blank, 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 blank. Okay, so if Apple is below 100, then I'll do the bear call spread, which you can kind of put in up here. Right, so that's kind of interesting as well. Pretty easy to kind of figure out. And you can build that with the all-in-one trade ticket also. So you have a lot of opportunities. So let's say, again, if you want to go to Apple, okay, and you're trying to do a bear call spread, you click on call spread, and there you go. So this one right here, notice you have to still kind of know what a bear call spread is, because as soon as it pulls up, it's trying to sell to open the 97.50 and buy to open the 95, which is a bull call spread. It's a debit spread. Notice it automatically pre-fills to debit down here. If I change this to credit, however, one of the few things I'm not a big fan of is it does not automatically change that to a credit spread. So you do have to know the difference. You do have to sell to open the 95, and then it does change that for you automatically. changes the buy to open. So if you're, change the credit down here, and then you change which strike you're trying to sell, right? Because in a credit spread, in a bear call spread, you sell the lower call, and then you buy the higher call for protection, and your goal is to make that premium. So this is a spread right now. I think Apple is at $97. So this would be an in-the-money bear call spread. So anyway, that's another way to do it. So you could go to all-in-one trade ticket. You could go to X spreads. There's a lot of ways to do it. Now, a lot of you, if you're trading OptionsXpress, you might be trading options themselves. So I'm going to give you guys an example of what I'm going to do. Let's just say on O'Reilly, for an example. This is the first chart I have pulled up here. So let's say I'm trying to do a trade, and I'm trying to buy calls. And I'm trying to buy calls if O'Reilly comes back down to 226. And you might say, why in the world would you do that? Well, it's out of support. There you go. It's out of support. So I'm going to try to buy some calls. You can set that up really easily in OptionsXpress. So again, O'Reilly, take some ORLY. Now you'd select your call option, whichever one you want to do. So 230 works fine. Let's go to buy to open. Quantity, let's just do 1. Market, we'll just do market. Duration. Here's what's cool is you don't have to change this duration if you do an advanced order. So I'm going to come down to advanced order, and I'm going to select contingent order. Then I'm going to press preview. Okay, press preview. And then you get to set up the order down here. So the order on this particular option trade is very, totally dependent on whatever it is you want. You can have whatever symbol in here. So let's say if O'Reilly, last price of O'Reilly, and we're going to come back to the chart. The last price of O'Reilly is less than or equal to 226. Now this is the fun part. You can select the time frame. So you can select any time frame that you want in this general range. So if you're looking to buy the bounce off of O'Reilly, then you probably would do something like this. So if it's between 9:30 a.m. Eastern and 11 Eastern, and again, duration right here is good to cancel. So this duration cancels out that duration. But that's it. That's the trade setup. Now, with OptionsXpress, I will say that as of right now, I have not been able to find out a way for OptionsXpress to say, all right, I want to enter an option order. Okay, so enter an option order, meaning this would be your entry order based on a contingency. And then, in addition to the entry with a contingency, I want to have a target and I want to have a stop based on the original trade, right? So an OCO order, boom, OCO order right there, all set up from the entry based on contingencies. So let's say I'm buying O'Reilly at 226 when the stock is at 226 right there. When the stock is at or less than or equal to 226, then I'm going to enter a call. My target, 250. My stop, 220. Okay, so I'm willing to lose $6 in order to make $24. OptionsXpress can't do that. So what you have to do is you have to enter the trade. Okay, once you enter the trade, it's active. So again, if I just press preview order, internal error. Oh, that's not good. Well, sorry, OptionsXpress. I tried. Let's try this again. I've actually never gotten that error with OptionsXpress. Not that it matters. I'm not getting paid to do this review. I'm just doing it for you guys. So let me click on options again, see if I can try this again. All right, O'Reilly, ORLY. Select option, buy to open, quantity 1, contingent order. Press preview order. So when you do the advanced order, you have to press preview order. And then last price is less than, again, 226. And then I have to, again, if I want to do this trade in the morning, try to catch some early morning volatility, try to catch the bounce off of that support, then I just press preview order, and that's it. So this order would go through, and then once this order goes through, so now boom, it's placed. It is ready to go. So my objective is to buy O'Reilly at 226, boom, on the bounce, and hopefully it comes up to here as my target, and this is my stop. So that's the trade setup right there. I'm not saying that's the most amazing trade setup in the world, but just as an example, it's decent. I'd give it a C+. Yeah, that's really about it. So once the trade triggers in OptionsXpress, again, once it triggers, then you go back in and you set a stop as an entirely separate order, and then you go in and you set your target as an entirely separate order. So you have two separate orders. You have your stop and then you have your target. And then once one of them triggers, so let's say the stock comes down to your stop and exits your stop, then you have to go in and cancel your target order. It sounds like a lot of work. It's really not. If you're a swing trader and you can only check your accounts once every 2-3 days or once every week or whatever. If you're trading so aggressively like that your stop and target might get hit in the same day, you really might want to kind of reconsider your strategies a little bit, in my opinion. If you're swing trading, that is, and you're trading an option. But the good news is, unlike another options account, it's called Options House. I'll show you something very specific. I'll go check order status really quick. Notice that O'Reilly is a buy to open trigger. Okay, it specifically has B2O, buy to open. If and when you get triggered into this trade, you set your stop and then you set your target, you have a buy to close. So let's say you do in fact hit your stop on day 2, and then day 3 O'Reilly has a giant rally and comes up here to 250. Okay, so your stop is 220, O'Reilly comes down 220 one day, and then the next day it comes up to 250, and it tries to sell your call. It won't be able to, because it's going to be sell to close something that you don't own. So STC, sell to close. So you'll try to be selling to close something that you do not own, therefore the order won't go through. Options House doesn't have that, at least as of the last time I've used them. That might have changed. This is January 2016, so it might have entirely changed that system. I'll probably be doing an Options House review for you guys pretty soon. But anyway, just throwing that out there. So it's not a big deal, truly, because if you place an entry, once it gets entered, then yes, you're going to want to place your stop as well. You can place the order approximately based on what the option price would be, and then you can do an OCO that way. So if I click on options down here and I go to one triggers other option trade and come over here to O'Reilly, let's just do Oracle. That's fine. Buy to open one, and I'm a preview order. And you do one triggers other an option trade. Here you go. So the other trade was a market order, right? So just buy it at market, and then here's your second order, and this could be a stop, right? So there's your stop, and this is based on the option price itself. So if you want to do the calculations of, okay, where is the entry? Obviously the stop is the most important thing to have, because if the market just started running in your favor and you couldn't get to the computer fast enough to close it, that's an okay problem to have. There are worse problems to have. So your objective then is just to place your stop and everything is all good to go. So you can do, and in most option brokers, you can set up a trade where you get your option order entered based on the option price, and you can do OCOs and all that other kind of cool stuff based on the price of the option itself. What's very difficult to do is find a broker that can trigger an option order based on the stock price and also trigger two option orders, your stop and your target, based also on the stock price. So you have three contingencies. The only brokers that I know that can do that are Thinkorswim and Interactive Brokers. There might be a few other out there that I haven't tracked down yet, but those are the only two. OptionsXpress, again, is a good broker for a newer trader out there, because it really does, truly will satisfy most of your requirements. Again, if you're trying to just do regular options, and I used OptionsXpress and still do for a long time, if you just kind of go down it, again, you're looking to buy a call option, here's your advanced order type. So you can do a stop order on your option. Again, it's just the contingency in itself. Here's the contingent on price. This is the only one that, again, you trigger in based on the stock price, and make sure when you're doing that, right, you deselect this little X button. Okay, so if you're doing an all-in-one trade ticket, you have to deselect the X button right here. Boop. And so now you're basing the option price on the stock price itself. Okay, you're not basing an option price on the option price. So once you place that trade, and then once the trade triggers, then you go in and you place a separate stop and you place a separate target, also based on the contingency price. And this right here, that's the thing that you're going to want to read aloud many, many times, because I have indeed messed up that chart, or I'm sorry, that order entry where I bought something. I said if it's higher than this price or if it's less than this price, I just totally goofed on it, messed it up pretty badly, and got into the wrong trade at the wrong time. So OptionsXpress, good broker. They really are. I'll give them an A rating. You can negotiate for lower commissions, especially if you've traded with them a long time. You can easily contact their help service very, very simply. If you're an OptionsXpress user in OptionsXpress, I mean, you have the help customer service always at your side. Click on customer service. You can do live help Monday through Friday, 8 to 8. So while the market's open, boom, you can click. You can chat with them right there, and they are very helpful. So anyway, I like OptionsXpress. I also have used Charles Schwab. Probably need to get back in there and give you guys a review of Street Smart Edge, because Street Smart Edge is kind of nifty as well. It has a few other cool things that OptionsXpress doesn't. But overall, good broker. If you guys have any questions about OptionsXpress specifically, regardless of what the questions are, feel free to email me anytime. My email address is jeremy@reallifetrading.com. My website is reallifetrading.com, and all the educational materials that we present there are entirely free. You probably say, no way, Jeremy. There's no way they're all free. Yeah, they're all free. Everything, every article, every video, all the educational tabs. All I need is your name and your email, so if I email you something, I know who to call you. And that's all the education. If you want to learn anything at Real Life Trading about the stock market, about options trading, we do teach it entirely for free. We also have a very nifty little YouTube channel, which is what you're watching right now. Make sure to hop over and subscribe to our YouTube channel if you would be so kind. Give us some thumbs up, and spread the word about Real Life Trading, ladies and gentlemen. You can find me on Twitter @NewsomeNuggets. Thanks so much for watching this review. Again, I really appreciate it. If you have any questions or need anything at all at any time, please let me know. My mission at Real Life Trading is to enrich lives. So I'm here to educate, entertain, and enrich people through the stock market. A lot of people feel the stock market's a very mysterious place, and in my opinion, it's just because enough people don't take the time to learn what makes it so mysterious. Thanks for watching. I appreciate it. Have a wonderful day. I'll see you in the next video, and until then, remember, love life, live life, and trade it. See you.